this month's Market Update. I'm here today with Dr. Vivian Xu, a member of Frontier Advisors Capital Markets and Asset Allocation Team. Hi there, Vivian.
Hi, Wei.
So there's been quite a lot of volatility with Chinese stocks recently from some economic policy stimulus. Can you talk to us a little bit about that?
Sure. So as you all know, the Chinese economy has been struggling with a property downturn and severe domestic demand weaknesses. And so the authorities are facing increasing pressure to meet the 5% annual growth target. That is what motivates them to announce the series of stimulus policies recently in late September and early October. The market has reacted quite significantly with the Chinese stocks jumped more than 35% initially. And the valuation is now close to historical median. So the policy stimulus is including, it's a mix of monetary and fiscal stimulus. It includes large rate cuts and some stock market support as well. For example, there is a new reference for the property sector. The Chinese authority called for stop the decline in the property market. This is a new wording that never appeared in official narratives before. And it is seen as a signal that the authority is shifting their policy stance.
So will that continue to impact growth in China, or do you think there's more that needs to happen?
Well, the majority of the market is probably still looking for additional fiscal measures, because the current fiscal measures announced are still lacking concrete details. And this is leading most investors to turn into cautious after the initial rally. So we've reviewed the announcements made so far. Most of the measures are focused on monetary stimulus, but the common belief is that more stronger fiscal stimulus are needed for a long-term meaningful recovery in the real economy.
So you talked about you've been doing your own review of that. What are some of the signals that investors should be looking for?
Yeah, well, historically, there are a few indicators that are highly correlated with Chinese growth, especially like credit growth, private credit growth. Sometimes we call it the total social financing. And historically, it's a good indicator of Chinese growth. And should there be significant policy measure announced, we should see the credit growth expanding. And another thing we're watching closely is the property sector indicators, of course, just given how big the property sector is.
Yes.
We're tracking high frequency data in property transactions and see, so far we haven't seen meaningful recovery in the data yet, but with the policy flowing through, that is yet to be seen.
Okay, so let's track east across the Pacific. The US economy, how have markets been performing there?
Yeah, the US economy in general is still holding quite resilient, with household consumption running strong, and inflation is coming down, getting closer to the Fed's target, and asset prices have been doing well. It looks like things are looking quite good, and we are getting closer to what the Fed is hoping for, the soft landing scenario. Yeah.
And so, of course, as we record this, a US election is a few days ago. There may be some people watching this video after the election result. So what are some of the outcomes that could eventuate from either a Republican or a Democrat victory?
Well, generally, the market has now moved to pricing in a bigger probability for Trump win. And the Trump win from a economic perspective expected to be slightly more inflationary than the Harris win. And so the market has moved to pricing in for a higher US Treasury yield and a stronger US dollar with the outlook for a lower tax and higher tariffs from a Trump government.
Great insights. Thanks, Vivian. And thanks to you for watching this month's Market Update.